which were made during the IPO process, and they have also fallen. So in the mid and small cap, you will have to be more stock specific. For example, we invest only in profit making companies. So for us, these companies don't exist. But from an investor perspective, I don't think the indices are going to give you the best sort of conclusion. Because a small cap index might comprise of 300-400 companies. Some of them might not have profits at all, and therefore the P multiple also gets a little bit of it's not the fair estimation, because the P looks like 30, but there are maybe 20-25% companies which are in losses, which sort of complicate the whole process. So mid and small cap is more about stock specific. Having said that, I would still advise, being a proponent of mid and small cap all my life, I would still advise at this point of time to have a balanced approach, because this choppiness might continue for some time. We are looking at market stabilizing, but we don't see a V-shaped recovery. At best, it would be an upward moving W-shaped recovery.
Got it. Sunil, a lot of high growth pockets are being singled out in commentary, maybe on the markets as well, but in commentary. EMS has become the poster boy of making an example of how companies were overvalued. My question to you is this, that a lot of these companies are, even in the recently concluded quarter, giving some very high growth promises, right? And the managements are on record saying that we'll probably grow 40, 50, 60% or what have you. Now, my question, would these companies continue to get punished if they indeed show growth? EMS is one, the green energies exposed companies are others. Or do you think the markets will start rewarding growth once the dust settles in the small cap space?
So Neeraj, markets obviously, respect fundamentals. But market price is equal to EPS into PE, and EPS is the profits, the PE is the perception. And perceptions change for a variety of reasons. New themes normally get a higher valuation because of the perception of higher growth and so on and so forth. So some of the themes and sectors you mentioned have great future, no doubt about it. At the same time, I think it's some of the companies which are listed got the advantage because there were not too many companies listed in that particular segment. So investors who are positive on that segment had very few choices, and therefore the listed companies got the benefit of scarcity. As we speak, more and more companies in all these high growth spaces are getting listed because equity markets have been kind. Businesses have been able to raise capital and grow quite rapidly, and that also creates, competition. But if the company keeps on growing at 50-60% for 2-3 years, and valuations have contracted at 30-40%, then at some point of time they will become very great buys, because if you are able to get some companies which over a period of 5-7 years can grow at 20% plus at maybe 25-30 P, it makes tremendous sense. So market will take care of excesses as well as excesses on the downside. I think that has been the trend. No one is superior than the markets. Markets will normalize. From time to time, markets go into these phases of overvaluations, exuberance, and then low valuation, and then just panic. I don't think we have reached a scale of panic as far as valuation is concerned, but in terms of market mode and the intensity of the fall, we are somewhere closer. But markets will adjust on its own. And if these companies keep on growing at 40-50%, then there is definitely going to be a lot of interest in these companies.
Sunil, I have one last question if you have the time, but just one last question. And that is on private markets, because they have become a very large part of almost every investor's book, right? I'm just trying to understand. They got a big fillip because of the kind of gains people made in public markets. I'm wondering if that space sees a significant cool off as well because of what's happening in the public markets, or could the template out there be different?
Neeraj, I would really, stick my neck out and say that market is going to give the maximum pain. Particularly what has happened over the last 1.5 years, there was so much capital available and there was such a huge FOMO. Any company with a presentation was able to paint great future and raise capital left, right, and center. And I think that went in a lot in private markets. We also launched a private market fund, mid to late stage. Luckily, we follow a disciplined approach where we are value conscious and we don't invest in loss-making companies. And we had drawn down 20% of the corpus of 2,400 crores we raised, out of which we have invested around 75-80%, but in good value companies. So we are quite, I think, sure that in the next 6-8 months, we will get great opportunity. Because one, the propensity and the eagerness to invest in private market will go down significantly. A lot of investment, as I said, which has gone into private markets in the last 6 to 12 months, is going to give a lot of pain, particularly to large, high net worth individuals and family offices who had high risk appetite, and therefore the due diligence process shortened. I jokingly say that in bull markets, the time to research reduces and the bet size increases. And in bear markets, the time to research increases and the bet size reduces. So last year was a time when the time to research was 2 hours and the bet size was 50-100 crores for each investor. The company used to come and say, "Bhai, डालना है तो डालो, नहीं तो इसने डाला है, उसने डाला है, इसने डाला है, आपको डालना है तो डालो." There was this FOMO. So I think over the next 6-8 months, 12 months, that segment will again give opportunity. Right. But I would say that what money has been raised last 6-12 months is going to give a lot of pain.
Got it. Yeah, fair point. Maybe researchers or fund managers, it might be a good time because there will be enough time to choose and pick where you want to invest as opposed to it being running out.
But I'll just end. No one likes bear markets, and it is very painful. But I think in a cycle of markets, and we have seen that over the last 25-30 years, sometimes these kind of pains come, and it's very easy to say that बेच देना चाहिए था, फिर ले लेते थे. That doesn't happen. And frankly, it is very tax efficient. So, say if our funds have gone down by 10-12%, even if you would have sold and bought it back, that much money you would have lost in taxation. Yeah, and then, entry point, exit point, impact cost, and so on and so forth. So these things happen. I think it is best to be a little bit patient. I know it is very tough, and particularly for people like us who manage public money. And I really, sympathize with the investors and RMs, and therefore we are doing a lot of calls also, because this is a time to handhold and give, fair advice. But please stay put. Don't try to do anything exotic. You might defer your investment. That is fine. But just don't sell because you are scared. You can adjust your asset allocation. If you're significantly overweight even now, maybe you can adjust a little bit. But don't get scared and do something which would amplify the already pain which we are all undergoing.
We started with the short-term advice from Sunil Singhania. Let the next 6-7 days go, be patient. And we're ending with a long-term advice from Sunil Singhania. Sunil, so important to have you on a day like this. Thanks for your time.
Thank you.
All right, that's a very large market voice with his words of wisdom. We wrap it up on this leg of India Market Open on the news that maybe, just maybe, there's a faint tick of an uptick from the lows of the day. Let's see if that lasts or no. Thanks for tuning in.
सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है.
AI बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachrajani. And this program got delayed a little bit because you had to listen to Sunil Singhania, or you got the opportunity to, and it's an important day to speak to big market voices and how they're reading things, because it makes sense to understand how they're dealing with the current scenario so that you can manage your portfolio better. As things stand, incidentally, we're off the low point of the day for the benchmark index at cuts of about 0.6%, so buying coming in from lower levels. The broader markets are more critical to watch, and there too you've seen a rebound from the low point. For the mid-cap index, we're down only about 1% or so, and the small-cap index, which was down over 3% at one juncture, today is down only about 1.7%. I say only because the gashes yesterday and early on today were very, very sharp. But before we get into individual stocks and your queries, which incidentally you can send to us on that WhatsApp number on your screen, or you can call us on the landline number at the bottom, let's go to an NDTV Profit exclusive. We've been telling you about the new income tax bill that has been in the offing, that has been approved by cabinet, and that is soon going to be tabled. And Shrimi Chaudhary is the one that has been breaking all of these stories for you. She's got all of the latest details and she's joining us right now to tell you about that. Shrimi, hi. When will this be tabled and what are the details that you're picking up?
Thanks, Alex. See, the much anticipated new income tax bill is expected to be tabled tomorrow, and it's promising, significant changes to the existing tax system. So, couple of highlights and, what we are picking up from the sources is one, that the new bill is proposing the introduction of a tax year, which is now replacing the current financial year and assessment year structure. Of course, the aim is to simplify the tax process and make it more consistent for taxpayer and remove the, all the confusion around the assessment year and the fiscal year. Another one important highlight is there will be a special chapter for new tax regime. Now, government has introduced new tax regime for individual in 2020. And with all changes in the recent concluded budget as well, where we have seen 6 slabs already, it will have a dedicated chapter in the proposed bill. Another one is the subsection, which is going to be converted into full section. Now, remember, there are a lot of subsection in the current existing Income Tax Act. Now that will be converted into full sections, and this restructuring is again aiming to make the tax laws easier to navigate and understand by the taxpayers and the professional as well. The important point here is, which sources telling us, that this is going to replace the Income Tax Act 1961. There has been a confusion whether there will be an amendment or a complete replacement of the existing act. So there will be a replacement of the existing act, and now if the bill passed in the parliament, it will be called the New Income Tax Act 2025. And if you talk about the possible implementation, it is going to be implemented by April 1st, 2026. And even they have done away with a lot of clauses also, Alex, particularly the clauses. The new bill proposing about 536 clauses and 16 schedule, and it's only span around 600 pages. Earlier it was 1,000 plus pages. So the whole idea is to, of course, simplify and modernize the tax system, making it more efficient and taxpayer friendly.
Absolutely. And thanks so much, Shrimi, for once again getting us those breaking details. Incidentally, the earlier Tax Act was formed in 1961, so it's a high time that there was a review of the provisions in those in that law, and that's exactly what the government has done. It could be visible as early as tomorrow. Now, let me introduce the guests for today. We've got Rajesh Agarwal as well as Vaishali Parekh joining in. Both of you, thank you so much for taking the time and joining us, and apologies for keeping you waiting. It's that kind of a market where, the advice is even more critical today. So thank you so much for joining in today. Let me start with the first question, which is a specific question from Shankar Ganesh on JK Tyre. And I'm going to club this with a question to Vaishali on how to read the market right now. So Vaishali, broader view on the market, some rebound, some respite from the selling. Does that continue in your opinion, and what are the key levels to look at? And specific question on JK Tyre, bought at levels of 457, need inputs or recommendations on hold, sell or average for the short term, and a stop loss as well.
Definitely. Good morning, Alex. Good morning, Rajesh. Yes, so there has been relentless selling all these days. Now today, well, there are a cluster of support coming at 22,800, 22,600. And right now we are seeing that for some time market is taking a breather and attempting to bounce back. So let's see how it goes. But very hard to tell if market as such is in a very deep oversold zone. So it's a matter of time that at least some technical bounce back cannot be ruled out. And now talking about, talking about JK Tyre. So overall, this stock has really beaten down. The trend is also gone low. So I would say since he's bought it for at higher levels, I think now is the time to definitely average it out, because in my understanding, this company is getting better even fundamentally. But best, I think if Rajesh, you are tracking fundamental grounds, you can answer. But I think on technical levels, worth averaging out at these levels.
A very quick view, Rajesh. From what I saw of the numbers, they were a little bit tepid, if you can call it that, because the EBITDA margins have contracted, raw material pressure for the tyre makers continues. Fundamentally, how are you seeing JK Tyre? Very quickly though.
Good morning, Alex. Good morning, Mahima, and good morning, Deepali. Vaishali, sorry. You said it right. The margins were under pressure, but this was for the entire industry, I would say. And going forward with the kind of auto numbers coming in, we think tire industry is going to do well. And JK Tires as such, valuations have become attractive at these levels. Maybe a 10, 20 rupees here and there is quite possible because of market condition. One can add even at these levels.
Attractive valuations at the current levels is the view coming in on JK Tyres fundamentally. We have our next caller lined up. Tarun from Ranchi is calling in. Tarun, a very good morning to you. How can we help you?
Yeah, I'm holding around the 600 shares of Hindustan Zinc at an average price of 501.
Okay.
Just wanted to know whether should I accumulate more and why this stock is, falling from a high of 800 rupees.
Right. You've bought the stock considering the fundamentals, right? So you want a long-term view on this?
Correct. Of course, long-term view, then dividend yield, etc. I bought it for a long-term time.
Understood. Rajesh, your view with respect to Hindustan Zinc, metals overall as a space has been volatile, but Hindustan Zinc in specific?
See, as far as the gentleman is concerned, he said why the prices have fallen down. Prices of the entire market has fallen down, I would say. The entire universe has fallen down in the market space, I would say. So it's not that Hindustan Zinc exclusively just fallen. The company is good. The fundamentals are good. Reserves are very high. They are doing very well, giving good dividends. It's just a matter of time when things start performing. As far as metal as a whole is concerned, it's basically dependent on China news, and China news are not that positive at this point of time. So yes, it might take some time, but if one holds for maybe 1 year or 18 months, one can expect good returns.
All right. Thanks so much for that view. We have to slip into a very quick break, but we've got more on the other side. We've got an entire half an hour lined up for you so that we can take more of your questions. So do stay with us.
सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Ask Profit. Cantabil Retail is in focus on the back of its Q3 earnings. Good set of numbers, being the festive season and of course winter season as well. Revenue is up 27%, EBITDA up 33%. Margins have improved to 33%, and net profit up by around 42%. And to discuss as to how the quarter has gone by and how things are shaping up for the company, we're joined by Shivendra Nigam, who is the CFO of Cantabil Retail, who is joining us now. Welcome to the show, Mr. Nigam. My first question to you is, it's been a great quarter overall for Cantabil Retail Limited. I wanted to understand as to what has augured this kind of growth, because rural is picking up, which is why tier 2, tier 3 cities are seeing more demand. And of course, with respect to the winter portfolio also, you might have seen a good uptick. What's the reading like?
So thank you. Thanks for calling. Yes, mainly due to wedding season and extended wedding season, the things were good. But overall brand was due to, getting this kind of momentum. So first half was slightly on a flatter side. So overall demand in all the, whether it's a tier 1 city, tier 2 city or tier 3, all picked up. We have registered a record sales, same store sales growth of 17+%, right? So for the quarter, first time, we also did 200 crore in the quarter itself, first time. So overall demand in the market was set, and it has been done in a tremendous way. And wedding was one of the reasons for this.
Right, Mr. Nigam, your margins have significantly improved to 33%, which has not been the case before, right? They've been in the range of around 25 to 30%. Do you think that 33% of margins are sustainable going forward as well?
So important is seeing how the margin trends quarter on quarter is being shaping up. So for us, Q3 was always high, and it has always been delivering 30 plus of the margins, right? Because as I earlier said also, the costs are fixed in nature. Rentals are fixed, salaries are fixed. The moment I'll get the better same store sales growth, EBITDA margin is definitely improved, because directly the gross margin has been converted into EBITDA margin. And we have made more robust our gross margin as well. It is 1% up, 61% as compared to 60%. So yes, overall my EBITDA EBITDA margin has been improved, and as for the earlier guidance as well, we have been able to achieve approximately, will be better off from the last year, and the standard 28 to 30% EBITDA margin is still going to be achieved.
Shivendra, next question is related to that. Alex joining in. You said that you intend to increase the store count to 700 plus. If I understand correctly, it's about 550 right now. Correct me if I'm wrong.
576.
576. And most of them are owned stores, right? So 400 plus are owned stores. Can you help me understand, once you achieve this entire breakup, what will the breakup of FOCO versus company owned be, and what will the implication to your margins be from that perspective? Because as I understand it, the company owned stores will give you better margins, right?
So yes, out of this, my December numbers are 576 stores, and we are working expanding on the same guidance of 70 to 80 stores per year. So this year also will be ended up with the same guidance, and 600 plus would be the closing number. Out of this, for 133 are the franchisee owned, and the company owned is the balance, approximately 443. These are the stores. Yes, expansion now is going majorly 90% plus in on the company owned stores only, because we are opening the bigger store size now. And my 9 months average size is 1700 plus. Average company size is approximately 1300. My average size opening for the last 9 months is 1700 plus, right? So going forward, also this ratio is going to be maintained. Majority stores will be the company owned stores, bigger in size, and few franchisee stores would come up. And yes, the margin is going to be intact because the company owned is having slightly on a better margin, and mainly we are opening the bigger stores because we are increasing the portfolio as well. Ladies are there, kids are doing goods. We have accessories contribution is good. Men's is obviously there. So now it's the requirement of the bigger stores. So where we are getting approximately 1000 square feet of store, the men's store, and the bigger 1500 plus stores are the family stores only. So going forward, also this size to be maintained mainly on the cocoa side.
Okay. So. Point well taken. Shivendra, the next question is also related to this expansion and the network at the end of 2 years, right? So if you're going to have over 700 stores, and if the intention is to increase your reach in tier 2 cities and tier 3 cities, what will this split be between that? And are these larger stores that you're opening, are they focused in urban centers or in the broader markets?
All the markets, to be honest, all the markets, right? So going with as of now, tier 1 is mainly counting the 8 big cities. So we are in South India, we are not there, right? So there are restrictions in tier 1. So we are mostly expanding in tier 2 and tier 3 markets. So bigger stores are opening in tier 2 and tier 3 market as well. So going forward, the same plan we are opening tier 1 wherever availability is there. Like we are in Delhi. So Delhi already we are having 55 plus stores. NCR we are having 90 plus stores. But the opportunities comes, we opened couple of stores in Delhi itself. Mumbai we are been expanding. So wherever in these big cities, tier 1 availability is there, we are opening, but the majority of the expansion going forward in tier 2 and tier 3 cities. And yes, you rightly said, by the FY27, we are supposed to cross 700 plus stores, and 1000 crore of revenue would have been there.
Right. Mr. Nigam, with respect to the kind of robust growth that you're kind of penciling in, FY24 you've done over 615 crores of revenue top line. This 9 months FY25 you've already done over 500 odd crores. What's the target like for FY25 and FY26 as well? Because we have been given a boost in consumption through no taxes being paid till 12 lakh rupees. What's the kind of growth that you're penciling in terms of top line as well as bottom line?
Right. So we targeting 18 to 20% is the growth, 17, 18, 19% would the continuous growth going forward as well with the part of this expansion, out of which it is important to have a same store sales growth. So 5 to 6% is the same store sales growth, and overall target, we are targeting 18 to 20%. Yes, you rightly said, it's a big boost for the, consumption is 1 lakh crore plus directly given to the hand, then RBI cut the rate cut. So this is the consumption is going, and ultimately is going to help the retailers only. So we are very hopeful our target of 18 to 20% are going to achieve. So this year, as you said, approximately 18 to 20%, somewhere around from 617, 725 to 730, we are finishing this year. And then next year also, and going forward in next 2 years with this rate, 1000 crore plus by FY27 should achieve.
And point well made. And also you're also guiding to retain your margins. Shivendra, pleasure speaking with you, and I look forward to the next update and speaking to you soon. Thank you so much for taking the time.
Thank you. Thanks a lot. Thank you so much.
All right, let's go back to the questions. We've got some interesting ones that are lined up as well. I believe we've got a caller. Raj is calling us from Bengaluru. Raj, hi, good morning, and thanks so much for waiting by. What's your question?
Yeah, hi Alex, good morning, and NDTV team, good morning, and hi everybody, good morning.
Good morning.
See, I was holding Windlas Biotech at the rate 800, and I would like to know, the results were fine yesterday, and top line growth was good, but bottom line I could find that it is around 3%. That is actually the growth. However, results were good, as it is a small cap. I would, all the small caps are actually, even after giving good results, even the larger ones are falling. So it is the same case with this also. I would like to know, as this is in CDMO space, can I hold it, or can I buy more? Should I wait more, or should I just exit out of this? Both, the fundamental and the technical.
So I can choose one, but Raj, since you're holding this for the long term, I'm just asking. You've got a pretty small holding, 20 shares. Are you planning to build it over a period of time? Was that the original thought, was to build it over a period of time?
Yes.
Okay. So Rajesh, then from that perspective, the question is to you. He's got 20 shares and he's in the green. The CDMO space, interestingly, a lot of players have reported better numbers and the outlook is relatively positive, right? So would you say that this is the best play? Would you suggest that he can increase his holding over the next few months?
See, Alex, there are two things. One, the gentleman has done a thorough research, and the second one is he's lucky in this market. Setting in a profit on a small cap company is a lucky thing, I would say. Yes, the CDMO space is doing well. There are positive reviews coming in from management commentaries and all those things. But Windlas, I think, at this point of time, is a very small cap company to play on a CDMO thing for a longer term horizon. Maybe a Laurus Lab or the other companies may be a better bet. So I would say you're sitting on a profit, switch from here to a Laurus Lab.
All right. So that's the view coming in on the entire CDMO space, in fact. The next query that we have is from Kushai Guda. His query is on Tata Motors. He's holding 305 shares bought at 874 a piece. So he's sitting on a loss of roughly 58,000 rupees right now. He wants to know whether he should keep holding it or sell at the current levels. Vaishali, I'll come to you on this one. On the charts, Tata Motors, what's the outlook like? Vaishali, I think you're on mute.
So I think Tata Motors has seen deep erosion, and I think, yes, am I audible now? Am I audible now?
Yes, you are. You're audible now, Vaishali. Okay, I think we've lost her due to technical issue. Rajesh, I'll come to you then. Tata Motors, what's the view like?
See, the company is good, no doubt on that. EV space is doing well. The numbers have been good, or monthly optic numbers. But still, I think somehow the valuation at this point in time is far more higher than the other companies of the peer set. Maybe a Hyundai Motor or a Bajaj Auto are on a better footing than what Tata Motors is at this point of time. Long term, yes, it's very good. Maybe one can continue to hold for a period of 2 to 3 years. But on valuation perspective, I think Hyundai is far more better than what Tata Motors is.
All right, Hyundai better than Tata Motors, the view coming in, but from a longer term perspective, you can continue to hold is the view for Tata Motors. The next query that we have is a caller. Samish from Chennai is calling in. Samish, a very good morning to you. How can we help you?
Hi, good morning.
Good morning.
So, I'm holding Suzlon Energy shares around like 214, averaging it around 44.12, I guess. So it's like I'm just started accumulating this share since it was around like 37, and it recently it went up, like it hit like upper circuits for 2 to 3 sessions, I guess. So like after that, it's still falling, even though the result is good. So I'm just thinking like to down average it from current valuation. So is it wise to down average the same, or like can I sell the stock now and just try to buy it after some time, like?
All right.
Again, if you bottom it out.
All right. Rajesh, again, I'll come to you. Suzlon Energy is the counter. I mean, the downtick in the stock is probably because of the entire market sentiment going down. But do you think that exiting right now and then making entry at the right levels makes sense for Suzlon Energy?
See, for a long-term investor, I don't think this would be a good strategy, selling now and buying again after it goes down, because one, the taxes take your differential profit which you make. Secondly, you never know tomorrow again you sell a stock and tomorrow it starts moving up. So no point in doing that. But as far as Suzlon is concerned, I think all the positives has been discounted. They have almost reduced, come to zero debt, I would say. Capacity is good, but the entire positives has been discounted in the price. It has run up quite a lot in the last 2-3 years or so. It's time to get out of this and maybe switch to a Tata Power, which is more stable in a renewable energy space, where you can at least be assured of your stability of your investment. So move from Suzlon to Tata.
So the two things to watch out for, of course, are your tax implications and, of course, the transaction cost. In certain situations, and consult your advisor, it might actually make sense for you to book losses to set off any gains that you might have in the rest of your portfolio. Rajesh, I don't know if you ascribe to that strategy at all, but if you've got over exposure to certain pockets of the market that are seeing a deterioration, perhaps it's something to consider. KNR Construction is the next counter that we're talking about. Rohan from Telangana is asking about this. He's bought at a price of 333 rupees per share and he's seeing losses. 263 is the current market price. What are the prospects? Should he add more right now, Rajesh?
No, adding at this point of time is not recommended, but yes, one can continue to hold, let the market stabilize and try to get out an optics. There are better opportunities in the construction space. Maybe Larsen would be the best, I would say, no doubt on that. But even IRB Infra or JK Infra would be a better bet.
All right. The next query that we have is from Amit, who's from Gurgaon. He's holding 500 shares of Nippon AMC at 685 a piece. He wants to know whether he should buy the dip or exit at the current levels. Rajesh, your view on the counter?
See, the entire AMC space is saying some amount of profit booking because two things. One, they have run up quite a lot in the last 1 year or so. Second, as we all know, equity markets in a wobbly situation at this point of time. So they are facing the heat. But long-term prospects looks very good. One. And when you compare Nippon Life with the other AMC companies, you find the valuations are still very attractive when you compare to other names. So it's better to stick to this, continue for long term.
Okay, continue for the long term. Yatin, actually, no, that's a slightly long-term question, so I'm going to take that later. But the question from Venkat is an interesting one. Would you hold on to an investment in Fineotex chemicals? The stock is holding on. It's not doing too much in trade from what I can say. Pull up Fineotex chemicals. It's actually a manufacturer of auxiliaries and specialty chemicals for textiles. 3,200 odd crore market capitalization, bought at levels of 62 rupees 3 years back. On the longer term charts, Vaishali, what would you do with this?
So I would say actually most of the chemical stocks have not done well, but I think it's a cycle. And seeing the Fineotex chemical, it is quite at bottom. I mean, the long-term trend is intact, and I think right now I would say continue holding with a stop loss of 265 because this would give a good return once this sector starts moving up.
All right, so that's the view coming in on Fineotex chemicals, right? The next query that we have is from a caller. Puran Chandra, if I'm not wrong, is his name, from Hyderabad is calling in. A very good morning to you. How can we help you?
Yeah, very good morning. Myself, Purna Chandra. Good morning to all.
Good morning.
Actually, I have invested in Akums Pharma.
Okay.
After the IPO, the share has corrected.
Okay.
And there was a good participation from anchors.
Mm-hmm.
And this has a 30% of CDMO market share. and retention rate of pharma companies is good in this company. So this is the reason why I have invested after a bit correction. So is this the right time during the correction if I can add something more in this, or do I have to wait for some more time? Actually, I'm planning to add some more after a correction of 10% or so.
Understood. Understood.
And we don't have PE, we don't have EV EBITDA also for this company, as this is a newly incumbent.
Got it.
Price to share is good valuation.
Understood, understood. Rajesh, your view on Akums Pharma?
It's a very strong company, a good player on CDMO, recently listed. The only thing is you have bought at 561, it's trading at 549. So at least wait for 10-15% cut if it happens. For averaging, at this point of time, averaging doesn't make any sense. For a long term, yes, one can continue to hold.
Okay, from what I can see, the trailing price to earnings is around 60 times. And yeah, it's okay, it's an interesting stock to look at. Yatin Desai is writing in. He's 60 years old, he points out, and he's from Mumbai. And he's got a query about the prospects of the Baazar style. Let's pull this up. Baazar style, and I mean, I'm not able to pull up the counter, but okay, Baazar style. He's seeing a loss. He's bought at levels of 320, and the stock is under pressure in trade today. He's asking what the prospects are for the next 3 to 5 years. Should he hold or sell? Rajesh, on the fundamentals, do you have a view on this one, and would you hold?
See, if I have to hold, I won't hold for a long-term horizon because the margins are very low. It's in a low ticket size retail marketing. Yes, it's growing too well, adding more stores, but at this point of time, I won't add, neither I would sell because of market condition. It's fallen very much. Around 250, 260 levels, I would try to exit.
All right, exit is the view coming in for Baazar style. The next caller that we have is Bhanu Chandran, who's calling in from Telangana. Very good morning to you. I believe you have a query on Rajesh Exports. Hi, we can hear you. Yes, I can hear you. Go ahead with your query.
I bought Rajesh Export at 549 rupees. I have 750K.
Okay.
At present situation, can I hold it or sell?
Okay, I'll get your technical view on this one. Vaishali, your view on Rajesh Exports with respect to the charts. Q3 was pretty strong for the company, considering the wedding season. But on the charts, how does it fare?
So I think it is worth holding because the overall market has gone into a corrective mode, but compared to that, I mean, this is still okay. I would say continue holding, wait for a bounce, wait for a good time, and then we can have a relook.
Okay, it has given up quite considerable ground from when Bhanu Chandran bought. Rajesh, quick view on this one. If you have a view, bought at very elevated levels. So what should he do?
It's a sell from our side. There are a lot of issues, diamond exports and all that. I don't think one should continue for a long-term portfolio. Maybe trading opportunities are in there. On a fundamental view, it's an exit.
It's an exit, okay, because it's had a torrid time over the last 6 months or so, down over 40%. HAL is a counter that is under pressure today. Let's pull up Hindustan Aeronautics. And this is on account of comments that were made by the top officer of the armed forces and talking about the delivery schedule of HAL, and the stock took a bit of a battering. You can't say whether that was the reason or it's just the texture of the market that caused the pressure on the downside. But we've got Gul, who's bought at levels of 4,221, slightly elevated level. But would you add more at the current price, and what is the strategy that you would employ based on the current charts? Vaishali, on the charts, what should his strategy be?
So I would say yes, I do agree that the stock has got into a corrective mode, but when I'm looking at the weekly chart and all that, the trend is still okay. It is just a regular retracement. So and it's really difficult to have the bottomed out stocks, but I think there is scope for further downside also if market is to correct further. I think 3,200 is a level to watch. 3,200 is a very good support level. I think he can average out at those levels.
Okay. All right. What you just saw on your screen, of course, was the comments that were made by the Air Chief Marshal. there is a clarification as well, and we'll get you over the course of the day. It's now time to hit the rapid fire segment, and this is Vaishali and Rajesh, where we throw questions at you over the course of the next 2 minutes. Do answer as briefly and concisely as possible. The first question to Rajesh. We've got Nagula Raju who's asking about Tata Technologies, which he's got an allotment in IPO. Should he hold for the long term is a question. Rajesh?
It's an ad from our side.
Correct. Fineotex Industries is the next counter. Sunil from Andhra Pradesh wants to know whether they should hold, average out or sell at the current levels. Vaishali on the charts?
Hold.
Okay, CDSL, fundamental views being sought. Rajan has bought at levels of 1,410. Should he add more at this juncture, or would you wait? Rajesh?
Of course, one can add. Corrected quite a lot. Good company add.
All right. India Cements is the next counter. Priyanka from Jaipur is holding 1,000 shares, bought at 375 a piece. Can she wait for 1 year or add more at the current levels? Rajesh, your view?
You can continue to hold, no adding.
Okay. Coming back to you, Rajesh, Zomato, bought at levels of 238. This is Purna Sai. 127 shares. Looking at the long-term prospects, what would you do?
It's a sell from a side.
All right.
Numbers have been not that good.
Right. RBNL is the next counter. Yogesh wants to know the support and resistance levels for this counter. Vaishali on the charts?
Well, RBNL is corrected quite a bit, and I would say hold on. The support, near-term support comes at 340,
Okay.
and resistance is at 3.
Okay. GE Shipping, coming back to you, Vaishali, on this one, bought at levels of 1,160 a piece. Would you book losses and exit and buy something else?
I don't think so. Shipping is not going to go out of fashion, so hold.
Okay.
All right. Prince Pipes is the next counter. Debe and Tiwari is asking this question whether to hold, exit or buy. Rajesh, on the your view on Prince Pipes?
2-3 days back, numbers came. They were not that good. Margins were under pressure. It's exit.
Okay. Last question. Siemens, ABB, Cummins. Which one would you buy for the medium to long term, Rajesh?
Difficult one. All three are good buys. But if you have to choose one, Siemens.
Siemens. All right. Thank you so much, Vaishali, Rajesh, for joining us on this program. And we had to interrupt you and keep you waiting for many of the minutes that we spent with you. So thank you for your patience. Appreciate it. All right, that brings us to the end of this edition of Ask Profit. It's been a pleasure bringing it to you. And if your specific question was not answered, we'll be back tomorrow to take more questions. In the meanwhile, do stay tuned. It's a goodbye from Mahima and myself and the team that put this show together. Thank you so much for watching.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
This entire special package and measures are kind of focus on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. We have yet another interesting company on the spotlight today, and that's BLS International. Of course, BLS International also has another subsidiary which is listed, that is BLS E-Services, but today we're going to talk about the parent, the larger one, with a market capitalization of around 16,000 crores at the moment. Let me start by telling you about what this company is all about. Now, it's a tech-enabled services player. What services does it provide? Well, it essentially provides services around the visa, passport, consular, citizenship, e-governance, attestation, biometric services, with all the governments that it is associated with all the various governments across the world it has partnered with. And among them, well, as I mentioned, that these are a handful of aspects that the company does cater to. This is actually a 4-decade-old company. It's listed, of course, some time ago, but it does have a global presence, and because of the fact that it has a diversified list of services at the moment, it's in fact one of the bigger, visa application outsourcing players in not just in India but also the world. It of course does offer a handful of advantages. If you just move on and talk about the corporate structure as well, besides its core focus, it also has about 100% holding in the BLS International FZE, about 51% in SLW Sports Media, and of course BLS E-Services, where it also holds around 51% stake as a promoter. And well, we do also know that BLS E-Services is also listed on the Indian exchanges. Now, this is as far as what BLS International does. Largely catering to, the services around visa applications and e-governance and several other factors. But what we usually tend to do on this show is we take every company and we'll assess it based on the kind of, performance that has come through, not just in terms of the revenues and balance sheet, but also cash flows. And after these financial statements, we also take a look at the return ratios. Moving on, we also consider how the shareholding has been, the kind of impact the shareholding can have on, a certain premium for the stock, street credentials in terms of the returns that the stock has seen, valuations, as well as street coverage. And to take us through some of these aspects, I am joined by my colleague Mahima, who's also going to shed some more light with respect to BLS International and how things have potentially panned out. So Mahima, thanks for joining in. As usual, let's start by taking a look at how the top line and the bottom line has panned out for the company over the past few years.
Right. So, strong set of numbers in terms of if we, check the 3-year CAGR for the company. In terms of 9 months FY25, the revenue stood at 1,500 odd crore rupees, and the 3-year CAGR for revenue has been 43%. EBITDA CAGR has been 98%, and net profit CAGR has been 80%. Margins have also improved, overall for the company. In terms of the revenue breakup, 2 main services provided by the company are being broken down into 2 segments, that is visa and consular services and the digital services. FY24 visa and consular services was around 81% of the total revenue, and digital services was around 19% of the total revenue. In terms of 9 months FY25, key operational metrics with respect to the numbers, in terms of visa and consular services, the number of applications grew by around 29% YOY, and net revenue per application grew by 38%, which is why we've seen a significant uptick in the top line number overall in 9 months FY25.
So that's coming down to how the revenues are panning out, and does seem like based, even judging by the 9-month revenues, it does seem like the company has been able to hold on to its growth. Let's talk about the balance sheet then, and it's a curious case. So we were actually a little bit on the fence of whether or not we should give the balance sheet a neutral rating or a thumbs up rating. And at the moment, what we are witnessing and what we are noticing is that the company has a very strong net worth of around 1,400 crores, and it has only improved over time. However, there has been an increase in gross debt. As in there has been an addition in gross debt. Now, we are yet to figure out whether or not this gross debt eventually gets subsumed by the end of this particular financial year, because before this, there was no gross debt at all. The company does have a very strong balance sheet case in this case, and that's something that we need to keep an eye on. The cash and bank specifically, that of course always augurs well. So, it always works in favor of not just your flows, but also in terms of the kind of impact that it can potentially have for your cash flows too. So, but because of the fact that there has been a little bit of an increase in your gross debt, is the reason why we're going to give it a neutral rating and not necessarily a thumbs up. So that's how things are. But I'm sure that Mahima will tell you that the cash flows also look pretty good.
Absolutely. So, while we've given neutral to the balance sheet just because the debt has gone up, cash flows certainly is a thumbs up for the company. In terms of cash flow from operations, if we see the FY24 number, it stood at 350 crores, which is just, almost the same as in the first half of FY25. So, they've done, cash flow from operations in the half year, which they did in full year last year. So, big thumbs up on the back of that. And net cash flow has also significantly gone up from 281 crores to 347 crore. So, and the kind of business that they are into is a, highly liquid business as well, which is why, the cash flow for the company is pretty much strong. So we've given a thumbs up when it comes to the cash flow. Agam.
Okay, so a thumbs up for cash flows as well, and well, that brings us to the end of assessing of the financial statements, and based on that, what kind of return ratios are you looking at? Well, as one might expect, very strong indeed. So when it comes to your return on equity, the ideal number would be mark well over 20%. The company is actually looking at an improvement from around 19.5% for return on equity all the way to nearly 27% by the end of 2024. It's the same for capital employed. These ratios have also improved drastically from 22%, ROCE, all the way to nearly 29% at the end of 2024. And well, it does seem like the fact that the company is on a very strong growth path with the kind of cash it generates and the returns it has on an operational level, well, it's only natural that the return ratios will also be so strong. So in general, all these factors come into play and in favor of BLS International, which is why it's going to be a thumbs up here as well. But as we move on, let's talk about the shareholding pattern as well. And it does seem like it's a well-held company, Mahima.
Absolutely. I mean, promoter holding at 70% is definitely a well-held company, as you rightly mentioned. In terms of the holding versus December 24 versus September 24, promoters holding has not changed. DI holdings, has slid a tad bit, but FII holdings has increased from 9% to 11%, and overall public holding has gone down by a bit, which was around 18.9% in September 24, which has come to 17.2% in December 24. Now, in terms of the holding overall, from a longer term perspective, promoter stake has reduced from around 74.6% to 70.4%, but still 70% holding from promoters is definitely a well-held company, as Agam rightly mentioned. FI stake increased from 1.4% to 11%. 1.4 was in March 22, and in December 24 it was at 11%. Public share has, however, decreased from 24% in March 22 to around 17.2% in December 24. So public shareholding has been going down, but FI has overall increased, and promoter stake has remained stable overall. Agam, so we've given a thumbs up in terms of shareholding pattern.
Yep, absolutely. So that's as far as your shareholding pattern goes. I'm going to talk about street credentials. And, this is where we were on the fence as to how we should go about rating the company based on the kind of returns it has seen and shown. So, firstly, if you just zoom out and take a look at the returns that is shown over the last 5 years, it's, a massive multi-bagger. It's given you 31 times the returns over the last 5 years. If you consider the last 1 year, and we do know that the last 4 months, particularly in the last 12 months, have been extremely challenging, which is why it's given you a return of around 10%. Now, at 16,000 crores of market cap, BLS International would likely be classified under the AMFI rules as a small cap. So if you consider the small cap index and the kind of returns it has given in the last 12 months, that's a decline of 3%. So BLS International is up 10% against the small cap index, declining by around 3%. Mind you that even the Nifty 50 is only up by around 3.5%, 4% over the last 12 months. So BLS International has certainly outperformed not only its peer index, but also the benchmark index, and which is why over the last 1 year, we're going to give this one a thumbs up too. And finally, moving down to valuations, naturally, Mahima, if everything is going to look good, then please tell us about the valuation.
Sure. So this is the only counter that we've given thumbs down to. Otherwise, it was either neutral or thumbs up, because the valuation picture still does not. Because we've seen such a run up in the stock price, the valuation picture does not paint a very pretty picture in terms of 12 months trailing. And this is despite of the kind of downtick that the markets have seen and even the stock has seen. 12 months trailing PE stands around 52.7 times, and as per Bloomberg, if we go to 2025 estimates, it stands at around 33.4 times, and 2026 it goes down to around 25 times. 25 times by FY26 still does not look cheap, which is why, this is the only counter that we've given, a thumbs down to, because valuations for this company are not going to get cheap even in the next 2 years.
So, to be fair, what usually happens is for companies which have shown such strong growth, we usually don't tend to see as much correction from the top as compared to, say, the mid-cap or the small-cap index. And that is the case for BLS International, which is why it's a relative outperformer. Well, fundamentally in a strong place right now, and naturally doing well as compared to other, mid-cap and small-cap companies in this case. And which is why, that brings us to the final parameter here. And that's what the street is making of it. Unfortunately, at least the consensus and the Bloomberg consensus, it only has one analyst who has coverage on this particular counter, and that is indicating an upside of around 51% from current market levels. But because of the fact we don't have a lot of analysts, at least on the Bloomberg consensus covering this, we're gonna not give this a rating, and we're gonna stay with the neutral form. So that actually brings us to a total roundup of how things have panned out for BLS International. So when it comes to its revenue and in the income statement in general, your profitability, your balance sheet, your cash flows, all in a very, very good place. Even the balance sheet actually looks very, very strong. Don't get me wrong there. Return ratios as well, a big thumbs up. So at least as far as the financial statements are concerned over the past few years, it's come up with the goods. Well, shareholding again strong, very well held company with the promoters as well as institutions. And well, we do know the kind of returns that the company has seen. It's just the valuations which are a bit of a concern, especially in a market climate like this. It continues to be a little bit of a factor that we're worried, which comes down to, well, a 6 out of 8 rating for BLS International, and that's of course a 75%, so it's first class with distinction under many circumstances. We do have the management with us, but before we go to the management, let's very quickly address the SWOT analysis for the company as well. I'm going to talk about the strengths. So firstly, the only listed player with a strong base. It has about 41,500 business correspondents across India, well over 130,000 touch points, and it has a span of around 70 countries in its kitty at the moment, with about 47 governments also across the globe as its clients. And well, it has a very attractive acquisition. In terms of weaknesses, well, valuations of course will be one of those factors which will play against the price of the company. And maybe, just maybe, the small creeping up in of gross debt is something that we're going to take up with the management as well. But Mahima, what about opportunities and threats?
Right. In terms of opportunities, they themselves mentioned that the air travel demand looks pretty strong. I mean, the passenger load factor in the aviation industry is on the rise, and the overall global air passenger traffic is set to grow around 1.5 times by 2030. The growth in outsourcing of visa, applicable worldwide will also rise on the back of this, and they are set to capture growth by cross-selling under digital services as well. So these are the opportunities for the company. In terms of threats, two particular threats. One is data security, because they deal with a large amount of data, and this is personal data. So this could be one of the possible threats. And the second one is technological developments. I mean, they will have to keep up with what the technology is being developed like, and if they don't keep up with that, this could be a possible threat for the company. So these are the opportunities and threats when it comes to BLS International.
Okay, all right. Well, I guess it's time to bring in the management of the company. We have Shikhar Agarwal. He's the chairman of BLS International. Shikhar, good morning and thanks for joining in. We were just going through the financials of your company, and so far, well, things look very, very strong. I think my question then is, based on the kind of 9 months of business that you guys have done, which also looks very, very heartening, what's the way forward over FY26? What is the expectations in terms of your growth rate for the top line as well as the bottom line?
See, if you look at the consolidated level, our revenues have grown upwards of 17%, compared to the same quarter last year. Our EBITDA has grown by more than 80%. We stand at an EBITDA of 158 crores compared to 88 crores last year. So there has been a major growth, and important point to note is that this financial year we have done acquisitions of upwards of 1,000 crores of through internal accruals, and we still have around 690 crores of net cash on the books. So going forward, our objective is to maintain the numbers. We have reached a 30% EBITDA margin percentage now on a consolidated level. If you see, our acquisition numbers are not fully in the system yet. From this quarter onwards, numbers should start coming at 100% for all the acquisitions that we have done this year. There are multiple tenders that we are bidding for. We expect also we are looking at more inorganic opportunities for growth. So our target is to maintain the EBITDA percentages, the numbers that we've achieved in this quarter, and going forward, seeing the growth that we've achieved in the past, we think that we are at a good position as a company.
Shikhar, Mahima also joining in. I just wanted to understand with respect to the gross debt of 230 crore in your balance sheet, what kind of debt is that, and by when do you expect to, get net debt free again? Gross debt free, because you're already net debt free. Your cash flow is pretty strong.
Correct. So we are already net cash position is around 700 crores. We have around 920 crores on the books. But if you see, so we can, for when we did some acquisition in one of the countries for some tax purposes, etc., we had to take some debt locally, to pay off the acquisition price. But it is up to us right now. So we are at a very healthy position, as a company. And going forward, the kind of growth that we expect, we definitely see more cash coming into the company. So we are looking at effective ways to deploy that cash that is further generated through organic as well as inorganic opportunities. There are multiple tenders that we are bidding for. If we win certain market share, we'll have to deploy certain cash for deployment of the offices across the globe in technology, etc. And also inorganically, we are looking at service industry globally, companies that can help us synergize our operations, profitability, etc. So if you see, as a company, we have solid parameters right now.
All right. Shikhar, stay with us. We'll just cut across to my colleague Alex, who is going to give us an analysis of the AMFI data. Alex, over to you.
Okay. Very critical to look at this data with a very close lens, because we've been speaking about potential redemption pressure in the broader end of the spectrum. And we told you this morning that the numbers for January would actually look good. And that's exactly what has panned out. Because take a look at the overall inflows into actively managed equity mutual fund schemes, and that is stood at 39,687 crore rupees. And if anything, it's better than the month of December. You look at inflows into some of these key categories, you look at particularly mid-cap and small cap, and you see inflows, net inflows to the extent of 5,147 crore rupees or 48 crore rupees into mid-cap funds, and 5,720 odd crore rupees into small cap funds as well. So those numbers looking very, very strong. Thematic, which has been a very key category in terms of the inflows into equity mutual fund schemes, you've seen inflows to the extent of 9,000 crore rupees. And what is interesting to note is that a large part of this is not in the way of new fund offers. Yes, there were new fund offers. There was only one small cap fund that was a new fund offer that has garnered about 1,040 crore rupees. There were 3 sectoral and thematic funds that have garnered 2,838 crore rupees. So total of 3,900 odd crore rupees of inflows from new fund offers out of the 39,687 or 88 crore rupees. So if you think about it, a large amount of the inflows are in the way of SIPs as well as in lump sum investments. The insight that I've gotten is that the lump sum investments have come in, but they have not been as elevated as you perhaps saw in July. I will remind you, in July last year was when you had the election result and you had a sharp drop in the equity markets at that point, and a lot of people deployed funds at that moment. So you had lump sum investments of 50,000 plus crore rupees at that moment. In fact, the average has been closer to about 35,000 or 37,000 towards 40,000 crore in the way of lump sum investments. And of course, you know about the SIP number as well. That had a record high in December. We will know soon enough. The call happens at 12 o'clock and we'll find out what the SIP number was for the month of January. Don't be surprised if that number is lower, because you've seen a higher number of cancellations. What we do know is that on a consistent basis, the net number has remained more or less where it was several months ago, around that 9,000 crore number. So despite the gross number being closer to 26,000 crore rupees, the net number, which is net of cancellation and stoppage, has actually been close to that 10,000 crore mark, but it's been very steady. All of those things are positive. Let's look at another category. And here you talk about hybrid, which is emerging as a pretty important category for the mutual fund industry as a whole. Even that has gotten inflows to the extent of 8,767 crore rupees. And what is the breakup here? You have multi-asset funds that have continued to get a decent amount of inflows, over 2,000 crore getting into these schemes. And arbitrage funds have also gotten inflows of over 4,000 crore rupees. What else do you need to know about? Overall, for the mutual fund industry, they've gotten inflows of 1.9 lakh crore rupees, and this is a very large amount that has come through. It is because you have significant inflows into fixed income mutual fund schemes, and this is normally what happens at the start of a quarter. January, understandably, would see a lot of institutions put money back into fixed income mutual fund schemes, and largely you're talking about the liquid and the overnight funds. So if I look at the inflows into liquid funds, it's to the extent of 91,600 odd crore rupees in the month of January. And if you look at ultra short term or overnight funds, actually overnight funds have seen an inflow of close to 19,000 crore rupees. The money market funds, which are also short term in nature, have gotten 21,900 crore rupees. So this is par for the course. What you should be focusing on, however, is the inflows into equity mutual funds, which have remained very strong. The other number that I would want to check is the index funds, which is mostly equity index funds. Again, it's a very robust number, 5,250 crore or 5,255 odd crore rupees coming in as net inflows into index funds. Akhil Chaturvedi is joining us. He's Chief Business Officer and Executive Director at Motilal Oswal. Akhil, thanks so much for taking the time.
Thank you, Alex. Thank you.
Yeah, so it's an important day to be talking about these numbers. The insight that I got from speaking to various participants in the industry is that the month of January was actually better than the month of December, and that has panned out. The question mark is not about that though, Akhil. Those numbers look great. The question mark is about the redemption pressure in the month of February because of certain panic that is set in about the broader markets. What would you say about both of those two data points?
So, Alex, certainly January month has gone pretty okay, honestly, given the kind of panic which had already set in the month of January, both globally and then locally, the FI selling pressure. One would have thought that probably the pressure on the sales would have been there, but the numbers which have come is very, very encouraging, and actually we have seen a tidbit growth in the net sales numbers as compared to the month of December, which was pretty good. The first few days, we are on 12th of Feb, whatever numbers I have been tracking, honestly, I am not seeing any redemption pressure so far. A little bit slowdown on the gross sales, but the net sales is not really impacted, at least in the first 12 days.
So I'm looking at the gross sales in the month of January versus December, and you're already seeing a bit of a deceleration, not very dramatic. But talk to me about your reading of this, because if I look at the month of December and if I look at the NFOs, there were about 11,400 crore rupees garnered for the industry through NFOs, whereas in the month of January, that number is only about 3,900 crore rupees.
3,900, yeah.
And so from